Welcome back to Investing and Trading Live, sponsored by TradingAcademy.com. My name is Josh Lilquist. In the last segment, we were talking about what is going on with this market. We had some great news this past week. CPI was quote-unquote good. Inflation has cooled, although the jobs report was up, I believe, right, Al?
Yep.
And
the jobless claims were up. Yep.
Jobless claims, correct. So, that doesn't sound good, but the market just continued to soar. So we talked about in that last segment, strategies that are designed to follow what the institutions are doing because they move about 80 to 90% of the market. So we can trade like them, not against them, or invest like them, not against them. And we had a lot of people texting in to the investing class that we do here locally. So we have local investing classes to train people just like you how to get in these markets safely, confidently. If you're brand new or you're a seasoned investor and you're looking to have more consistency, these classes are just for you. These are 2-hour classes. We're located right here in Bloomington, right off 494. I want to give away some seats for that class, and you can do these during the week. You can do these on the weekend or the evening. Simply just text the word investing to the number 210-210, and you'll get a link right back in a text, and just click the link. It'll bring you right to our landing page. Or if you like to be ahead of the game, simply just go to investwithota.com, and you can pick your own date there. That's investwithota.com. That being said, let's get into our market update. Obviously, the markets are nearing not nearing all-time highs, but getting to a point where if we continue to go up, could this market continue to go further back to those all-time highs? That's an option. That's a possibility.
Sure.
And that's one of the things that we can prepare for. But also, we're getting to pivotal points in the market where we could see a drop in the market. So we don't know which way it's going to go. We do not have a crystal ball. But what we can do is plan for that and be proactive, not reactive. And I know, Al, you've been teaching a lot of these classes. I've been teaching a lot of these classes. We're seeing more and more people have that mindset. They want to be proactive. They want to plan for their future rather than just hope for their future and hope for the best. So they are taking action in their own hands and looking to get started with things. And we've been talking a lot about that on the podcast. We do a podcast each and every single day, giving a market update. So if you don't listen to that, make sure to go to Investing and Trading Live and smash that like and subscribe button wherever you listen to your podcast. But we've been talking about what's happening in these markets, and then how do we take action to get started? We talked about in that last segment, Al, that Target just soaring after earnings about 18-ish%, which is a great opportunity, but it came right off of a demand zone that we've been talking about for several months. And it's just an opportunity. A demand zone which means we're seeing institutional order flow or institutional buying coming in, and that's where we want to trade with them, so that way we're not late to the party. That being said, Al, we have a lot of listeners right now that have retirement accounts, good-sized retirement accounts, and they feel like they have something started, but they're just not near where they need to be. So how do you help people plan for no matter which way this market goes?
Well, you plan by learning how to follow what makes price move up and what makes price move down for any type of investment that you're doing. And you need to have a strategy that provides you on a consistent basis with that information. This is what you want to be able to do this with a high degree of confidence, knowing that when you make a trade or an investment, that you have the greatest probability of it working in your favor with the least amount of risk when you make that entry or exit, and then also with the highest profit potential, the highest probability of it working in your favor.
And we talked a little bit about that in that first segment that's either at or near a turn in price, which is supply and demand, identifying that.
Yeah, exactly. What we are actually looking for, Josh, is unfilled orders, where unfilled orders are going to become filled orders, because that's the only thing that really would drive the price of something.
Correct.
So we're kind of hunters of unfilled orders. This is hunting season.
It was, hunting season. So those hunters, we're seeing a lot of hunters coming in now that the season's open, but there's another one coming up.
That's true.
Just so we know that.
But we're always hunting for those unfilled orders, because that's the most important thing. When does an unfilled order become filled? It's when somebody starts buying it. Somebody starts making those orders active. But in order for price to move, it has to be somebody that has enough money. I mentioned clout in that last segment.
I like that word.
Somebody like Warren Buffett, oftentimes when he takes a position in something, it may be It could be billions of dollars in one position, certainly enough to move the price of something.
Although, that being said, he can't get into billions of dollars worth of positions at one time. So that's the benefit we have. We have an advantage to do that.
That's exactly right. Things have changed over the years, and a lot of those changes have been in the favor of us as retail traders. Warren Buffett, one of the reasons that Warren Buffett buys something is because he feels, and this is the same thing with any big institution, Goldman Sachs, JP Morgan, they find true value at a certain price. And that's where they want to be active. That's where they want their unfilled orders to become filled.
And basically let them do that work.
And let them do the work. You can spend days, weeks, months looking at fundamentals, but all that information is already known. It's all public knowledge.
Yeah, so that's not what we want to do.
No, the institutions already know that information. And if you know how to read a price chart, that price chart is going to tell you what the institutions are doing, not what they're saying or what the pundits out there are saying. So, when you're looking at making an investment in something or a trade in something, again, you want to make sure that you're doing it at the right time, the right price for it to work in your favor. Mm-hmm. And we're seeing a lot of people come in that know what they should do. They understand that they want to make the right choice, but they don't know how to do it. How do you do that? How do you find where those unfilled orders are?
Yeah.
You mentioned like Warren Buffett not being able to place all of his position at one time or take all of his position at one time. Same thing is true with all the big companies. They know the true value of something, and when the price exceeds that value, they'll just hold off. Part of their order maybe got filled enough to move it, but they're patient enough to wait until the price comes down into that same area where they feel there's value, which
Correct.
we have identified as a demand or buy zone.
Yep.
And then more of their orders are placed.
And that's the cool thing is we're identifying that prior to that happening. So that's why we have an advantage. They move the markets. They do all the work. We just need to have a strategy that's designed to do that. And you said something very interesting. I just want to clarify, not really clarify, but make sure our listeners understand. And you mentioned everybody knows that you're supposed to follow the institutions. Everybody knows that you got to follow the smart money, the big money. The question is how do you do that? That's why we have these investing classes out. We have these investing classes here in Bloomington. That way you can see that. We actually have these classes in Bloomington, in Edina, Maple Grove. Where else do we have in these? Woodbury. So we have these classes all across the metro. So that's why we're giving everybody the opportunity to have more financial literacy. To come into one of these classes to understand, not just know that they need to do this or do something with the institutions, but how that happens, how that works. It's a physical setting to do that. So text the word investing right now for 2 seats for an investing class to get started. Text the word investing to the number 210-210. I almost forgot to give the number. Text investing to number 210-210 for 2 seats for the investing class, or simply go to invest.ota.com and pick your own date right there. So Al, now we everybody knows, like I mentioned, that you need to follow the banks, follow the institutions, and that's why we have a strategy that's designed to do that. And it's supply and demand. Just explain a little bit to let's just say somebody that knows that you're supposed to do certain things, but doesn't know how to do that. Just explain, I guess, in simple terms, what supply and demand is. And I know you kind of explained that a little bit, but just focus on what supply and demand is and how we can use that to minimize our risk in the financial markets.
Well, if you just look at the words demand and supply, we know that if there's an area where there's demand, it means there are more people that want to do something at that particular price. If there's more supply, we know there's a number of people or people with enough money invested to want to do something that's going to drive it the other way. So if there's more supply of something, price is going to go down. If there's more demand, price will go up. That's just a financial law that really can't be broken.
Yeah, let me give an example. Let's just say I'm in the desert, okay? And there's no water in the desert. Mm-hmm. You got a group of people coming in, and I have a little store. They have no water. It's 117 degrees, and they're coming in there. They are all thirsty, sweating, and they all want some water. But I have 7 bottles of water. There's 17 people coming in there. If there's seven bottles of water and there's 17 people, what can I do? I can continue to raise the price of that because there's a whole bunch of demand for less supply. And that's the same thing in the financial markets. If you have more buyers than sellers, price has to go up.
Yeah. Now, what if I buy all those bottles of water from you, I have 100 bottles of water, and there's 90 people in the desert.
Mm-hmm.
Now I've got more water than I have buyers, so
Correct.
I have to lower the price to get those people to buy.
Correct.
Because they have
It's
the
an
upper hand now.
abundance.
Yeah. So yeah, it's supply and demand. That's really the simple strategy that we're using. A lot of people. Here's really what the markets are, Josh. It's a collection of people that are buying and selling, and they're making decisions based on questionable data, opinions, and predictions and guesses, and they pile in. That's what creates these extreme highs and extreme lows in the market. It's the emotional action of the public, and you know who understands that and takes advantage of it?
The institutions,
The
know
institutions
that.
do,
They know what
exactly.
the public is getting. They probably produce that information.
Well, not only produce the information, they can actually maneuver the price of something to get the public to jump in. We just saw, a couple of days this last week where the market was up big.
Mm-hmm.
And I can guarantee you there were a whole bunch of people out there thinking, you know what, I had this money now, I've had it in cash maybe for a while, or I think now is the time to get in. I have to get in because this market is going to keep going up. That's fear of missing out
After price moved.
after the price.
Price
has
is
moved.
up 10% in the last 2 weeks or so.
Sure.
So they're getting in after it moves. So think about that for a second. That's why you got to have supply and demand, understand where before that happens. Actually,
You do really. It is. It's actually we're not predicting. We're just looking at where the greatest opportunities are for the big institutions to be making their moves, and we need to be active when they're doing that and be decisive enough to make a decision before that trade gets away from us.
correct. And I mentioned earlier minimizing risk. How do you wrap around small risk and minimizing that with supply and demand?
Yeah, well, let's talk. What is risk? Risk is just fear. It's fear of losing, and that's understandable. People have worked hard for their money, and the last thing they want to do is lose it. So what do? Yeah, maybe they put it into a 401k, or they give it to a financial advisor to invest, and they think maybe that there's no risk there or minimal risk.
That sounds like a hope strategy to me.
Well, it is a hope strategy. And talk to people that were in the market in 2022 that had financial advisors. They lost money. The majority of the people that were in the market in 2022, in fact, the average 401k lost 25% in 2022. And those 401ks were, they were provided by a plan sponsor, by a firm, maybe like Merrill Lynch or Goldman Sachs. Well, risk is going to be there no matter what you do, no matter how you invest, no matter who has your money. There's going to be risk. And here's the number one thing. If you want to be successful as a trader or investor, you have to control risk. Every professional trader out there will tell you that is the most important component. Mm-hmm. And risk is something that hasn't actually happened yet. It's something you think is going to happen. So if you think something is going to happen, why not look at why it might happen and then control that? Like crossing the street. Mm-hmm. If you cross the street, there's a possibility you get hit by a car or a truck. So you look both ways and you
Correct.
wait until there's no traffic.
Yep.
There are ways of managing risk, and that's the number one thing that we teach our students. Every professional trader out there will also tell you that it's not how many times they win or lose that's important. It's how much they make when they're right compared to how much they lose when they're wrong.
I like that.
If you can keep the losses very small, accept the fact that there will be some, but keep them small so you never have a big loss, you still can have small wins, medium-sized wins, and the big wins that are out there, but never a big loss.
I like that. This key is minimizing that. I don't like saying that scary R word. Everybody is afraid of it. And then the one thing that keeps people from getting to their financial goals, it's a 4-letter F word, Al, and this is a family show. It's fear.
Yep.
It's because they have the fear of doing something wrong. Okay? Well, if you think you can or you think you can't, you're actually right. And that's why we have people coming into these investing classes, because they want to know what to do to make a smart investing decisions, whether it's in your income account for an income strategy or it's in your 401k like you're talking about, an IRA, and then how to have smart decisions there so that way you can build for your future, not just hope. And I want to talk about something about hope in the next segment, so stay tuned for that. If you want to come into one of these investing classes that we have to talk about how to minimize risk in the markets, not have the fear of the markets, and be more confident in your decisions, text the word investing to the number 210-210, or simply go to investwithota.com and pick your own date for the class. We do this during the week and the weekend. Coming up next, Al mentioned we're hunters. I want to talk about hunting in the stock market to make smart investing decisions. So stay tuned. This is Josh and Al. We will be right back.